What do you do when the market dips and you want to deploy more capital? You want to what they call buy the dip, and you want to dollar cost average. Well, I look at three things. So yesterday, the market had quite the dip. This is an hourly. It essentially went from here, like 2.28 trillion or something, down to below 2.2 trillion, 2.18 something. It dropped significantly, which if you look at the consolidation over time, this has been quite choppy, and this is a fairly low point. So I personally bought in. Welcome to Crypto for the Rest of Us. I do this 6 days a week, tip, tool, or coin analysis, excluding Sunday. Today we're going to talk about buying the dip. Here's what I do. I look at three different things. First of all, I already know, because I've looked at my portfolio, of where I would like what I call more exposure. In other words, I would like to have more of particular crypto. I'd like to increase my investment. That's the first thing I look at. So I quickly go to those and say, okay, which of these do I want to take a look at? Second, I look at what's the current price that these may have dropped to versus my average price. Not looking at the all-time high or anything like that. What's the average price that I have? And then third, once I narrow those down, I look at, well, would the investment even make a difference? I'm going to assume in this example that every month you might have a certain amount of money from your paycheck that you want to dollar cost average in. Okay, first thing. Here's my example. I've got three projects here. Aerodrome Finance, which is DeFi, Fetch, which is AI, and Hedera, HBAR, which is pretty much a catch-all. These are my average prices. If you use something like Coinbase, you can look, and even though you may have made purchases over a long period of time, it'll tell you what your average price is. If it doesn't show you, like a crypto.com, you can go in and look at your transaction history for particular crypto. For example, here's an example where all you have to do is put down how much did you pay. It'll show you the transaction. It'll show you the dollar amount you paid. It'll show you how many coins you got. So here's $1,000, 500 coins. Next transaction, $600, 400 coins. You click the next one, 750, 420 coins. Write it down, real simple. You sum up the total invested. Here you go. You sum up the total number of coins. There you go. Take the number you invested, divide it by the number of coins, and there you are. $1.78 is the average price. Okay. So you want to know the average price that you have of everything you've invested in, assuming you've made more than one purchase. Then you look at this column represents today's price. So Aero is at 0.78, Fetch was $1.14, and Hedera was 0.0617. I like to quickly look at the percentage. So what percentage is this of my average price? So assuming all the prices are lower, you can see that 0.78 is about 80% of 0.98. But what's really important here, I like to look at percent gain. What does this mean? This is real simple. It just says that if I buy at today's price, for example, let's just use, for example, Fetch, $1.14, and it goes up to my average price, which I'm very happy with. If it were to just hit my average price, I would make a 47% gain on whatever I invest today. So if I believe $1.68 is a great price, and I think it's going to go higher, then obviously I believe it's going to hit that. So if I invest $1,000, my $1,000 that I have this month to invest, and I put it into Fetch, I believe I could very quickly have a 50% gain. My $1,000's $1,500. It's just a quick way of looking at what would that $1,000 do depending upon where I put it. So in Aero, it would be a 26% gain, not as much. Fetch a 47, HBAR 51. All right. That was the second thing I look at. What percentage gain could I get on my money? Because I always think of it in terms of what's my average of everything I've invested in that crypto, but also, well, maybe I'm willing to put in even more money if I think it's dropped really low and I could just have a quick gain of 50%, which is unbelievable. You drop 10 grand in, you just made 5 grand. All right. So I've decided that I'm going to take a look at Fetch and Hedera to determine where I want to put my $1,000. We have our average price. We have the price of today. Here you go. This is very simple. You take your average price, and here it is, 0.0932. This is Hedera. And you look at the number of coins that you have, 392,000, and you multiply those two, and you get the total amount I've invested so far. This is just an example. Now, you can get this many different ways, but you've got your investment amount, your average price, your coins. Okay. So now you've got $1,000 to put into the market, represented right here. And you're looking at today's price. Here's today's price. I'm using the same color, so you can see 0.0617. And that yields If you take $1,000 divided by that, it yields that many coins, 16,207. So what I'm doing right here is exactly what we did over here to determine the average price. We want to see what is the average price going to be if I put in more money. You total these rows, you get 37,606. That's what I invested. You total these rows here for the coins, it'll yield, it's 408,978 coins. Now you divide the 37,606 by the 408,000 coins, and I get an average of 0.092. Now you can just quickly look and say, well, my current average price is 0.093. Okay, so if I invest another grand, it's going to drop to 0.092. Not a huge difference. I just divided the two. It's basically a 1% drop. So if I put $1,000 in here, in other words, if I put another $1,000 at risk, I'm going to put it at risk in this particular one and only drop my average price by 1%. To me, that's not a great gain. Fetch. Same thing. Here's where I invested, 1,680. There's my average price. I have 1,000 coins. Okay. What if I put another $1,000 in? The current price is $1.14. It would yield 877 coins. So we sum these up, we divide the dollar amount by the number of coins, we get $1.42. That's more interesting. My average price is $1.68. Currently it's $1.14. So if I put in a grand, if I took my 1,000, because this is opportunity cost, I only have 1,000. So I can't put 1,000 here and 1,000 here. I got to put it in one of these. Where do I want to put it at risk? And where do I think I'm going to get my best gain? Now, I'm not talking about, do I think this project's better than this project? I'm saying apples to apples. I don't know where either are going to go, but here's where I'm going to put my 1,000 potentially. So when you divide, you get $1.42. Well, that means that it dropped my average price by 15%. So if I want a 10x on this coin, well, simple math, it'd be $16.80. But if I drop the price to $1.42, it'll be $14.27. That's a big difference in my mind. So if I'm going to decide between these two, I'm looking at two different things. Both of them could yield me a real quick 50% gain. That makes me feel good. This is dropping the price by 1%. This is dropping it by 15%. So in this case, I'm going to take my 1,000 and I'm going to deploy it into this project. Now there are other projects that it might have even more impact on. So typically I will go back and look at the other projects, and I do this for everything. I look at the average price of everything I have, what everything dropped when there's a big dip, what are the percent gains, because I could make some quick money, and then I look at I just drop it into this spreadsheet, which I already have for all of my coins. So I just merely put $1,000 in. I usually have one field, let's say it's $1,000, and everything reads off that. Like, check this out. If you just make that equal to that, and this guy equal to that. Now watch, if I had 1,000, what if I had 2,000? Ooh, bummer. What if I had 2,000? Well, it would update this to 2, update that to 2. You can see the percent dropped is 2.58%. This one's 20%. Well, what if I had 4,000? It automatically does both of these cells. This one would be 4%. This one would be 25%. Okay, so there you can see very quickly. So I have this spreadsheet, if you will, already made, and you should as well for all of your coins. So if you've got additional capital to deploy, you see a dip, all you got to do is update the current daily price, put into one cell how much you've got for that month to deploy, and it'll quickly show you where you might want to consider putting that money because you don't have 4 and 4. You don't have 8, you only have 4, and you want to know where to put it. Anyway, hope that helps. That's just real simple how you can quickly determine if there's a dip and you want to buy the dip, where you might get the best bang for your buck, either quickly or over the longer period of time. Thanks for watching. Hopefully this will help you also make generational wealth with crypto. Have a great day.